Thanks for joining us, Brady.
Good morning.
But, you know, it's not just about wheat. It's about the whole gamut of these agricultural commodities.
Yeah, it really is. You know, when we saw Chicago wheat run up, as well as global wheat prices, really, it also drug up the entire ag commodities complex. But interestingly, as you mentioned, we had the biggest one-month rally in July for wheat prices, up about 60% on the Chicago Board of Trade, and that's actually the largest spike we've seen since 1973. And there was one common denominator in both of these, which was Russia.
Yeah.
And remember the great grain robbery in 1973 that sent prices soaring.
I don't know about that. What is it? Well, the great grain robbery.
The great grain robbery, basically, Russia was in a similar situation of having a shortage domestically. And a lot of the grain traders approached all of the major suppliers in the United States, and they did it all at the same time so the prices wouldn't respond to their increased buying. And basically, they sucked up the global stockpiles. So that was what happened in 1973, and now we find Russia in a similar situation.
Are they going to do the same thing, do you think?
I don't. I think it's an export ban, of course, to keep things domestic. I mean, I think that the key thing is about the Black Sea region, as you mentioned.
But production there's ramped up since then as well, and it is self-sustaining, Russia. So
yeah, well, the interesting thing, of course, about agriculture is that weather plays such an interesting factor. And, you know, they say that the wheat crops have 7 lives, so you can lose a wheat crop 7 times before it finally goes. The concern this time, of course, is that not only is you know, the crops that are being harvested now in the northern hemisphere, but also thinking about the crops for the winter wheat, which will be planted just a few months later. And if Russia doesn't get rains, and also Canada, of course, is wet, and then also if you look at the southern hemisphere, the winter wheat crop is about to be harvested.
So at the moment, it does look like the path of least resistance is higher, essentially, is what you're saying here.
Right.
And, you know, this ban by Russia till the end of the year, many people are saying they're going to have to extend that.
Yeah. Well, I think we'll have to see, as I said, that we'll, you know, where the Russian crop finally ends up. I mean, there's a lot of Siberia still that has to be harvested, and there's a lot of grain stocks globally. You know, the difference now in the commodity peaks versus before is that the oil prices are not over $100 a barrel. The stocks-to-use ratio for wheat globally is quite high at about 23%. The U.S. is about 48%, so we'll definitely see more exports out of the U.S., probably filling that gap. And, of course, the global economy is a bit on its knees, and we'll see what the Fed does tomorrow. But it's likely that the recovery in the U.S. economy is going to slow down. Right.
When do we actually start feeling it in terms of when we go out and buy our daily bread?
Well, it's, you know, not so much about bread, but probably more about animal protein. If you think about poultry and pork, we may see some pass-through. And I think that the winners in the industry here will be the companies, of course, that have production.
So it have an effect on meat prices, rather?
Yeah, also meat prices, absolutely.
So when we look at that, though, you know, then it obviously begs the question: does it create inflation, and the Fed has to react to it?
Yeah, possibly. I mean, we'll see to what extent that they're able to pass those prices through the system. It'll be quite interesting to see what. But if you think about bread, of course, you know, if you add a few pennies, most of the cost really is in the packaging and the transportation, rather than the wheat price itself.
Right. You also look at corn, I believe, and you look at also what's been going on with soybeans and sugar. Are we in the same sort of predicament there? Well,
with corn and soybeans, really, the stocks-to-use ratios are still quite high. Sugar's a bit of a different story. But when we talk about corn and soybeans, now here enters the dragon of China. China started to import corn now for the first time in about 15 years, and likely to import a lot more corn. So China's likely to keep corn prices pretty high, and that's a fundamental we think will continue in the coming years.
Brady, when we look at sugar, though, that is generally down to a shortage here, isn't there? And also we've got all sorts of bottlenecks here in Brazil, etc.
Yeah, well, there's Brazil, and there's also, of course, India, and we've had the monsoon rains now coming back, but that's really been what's driven the prices higher for sugar in the past couple of years has been the shortage in India. And India become essentially from one of the major exporters to one of the importers, which I guess is a similar situation now with Russia and wheat.
Yeah, let's just talk about generally the whole gamut of agricultural commodities. Weather's crucial. People spend millions, don't they, trying to work out what long-term weather forecasts are going to be.
Yeah, absolutely. I mean, you know, there's weather, there's commodity and weather's derivatives all together, and I think it's just to what extent you can really bet against Mother Nature, because I think she always surprises us, and you know, when we either too much rain or not enough, and it's typically never quite the right mix.
But you must be busy. You must also have weeks go by where you're going, just what do I do next? You know, just you know, pondering what to do.
Yeah, absolutely. I mean, because you never really know which way the prices are going to move, and also who's going to benefit from that, and the best way in which to hedge that as well. Because, you know, now within China even you have a lot of vertical integration, meat protein systems being put into China, and companies are trying to also hedge their commodities domestically, which is creating some interesting challenges and opportunities.
What about when we look at what's going on with gold? Gold prices looking, some would say, a bit toppy right now. Do you see some rotation within the whole commodity sphere?
Yeah, I think, well, the gold demand, I guess, is a bit different than agriculture commodities because it's a bit of a safe haven as well.
Yeah. But I mean, purely as a speculator, let's say.
Sure. I mean, you know, with commodities being all priced in U.S. dollars, and if we see continued weakness in the U.S. dollar, then I think we'll see some rush back into commodities, and it depends, of course, on the stock market and what we see for equities. And I think with a bit of a bearish outlook probably on the economy and what the Fed says, likely a downgrade in the U.S. System, that we may see more money flow into commodities, which are quite liquid.
Yeah, which is the best way to actually look at this? I mean, is it to actually buy the companies that are the agricultural producers, or do you actually buy the contracts for these commodities themselves?
Yeah, I think it's good to do a combination, both buying the companies themselves, because typically their prices, of course, are less volatile to commodity prices that move more on a daily basis, and we've seen they can be quite dramatic. So I think it's really probably a combination of the two, and the winner is really in what's happening with the wheat prices. And we've seen Grain Corp last week took over AWB. AWB was the largest wheat exporter out of Australia. So we see more activity and consolidation in that side of the sector, which I think are some good opportunities. And then, of course, there's also ETFs in the ag commodity space. So,
Brady, thanks very much indeed. Brady Sidwell, from Rabobank.